Welcome to Credit 301 from Adulting, a Crash Course. In this video, we'll talk about who's looking at your credit score and why it all matters at the end of the day. First, banks are the ones who are most interested in your credit score. They will make two decisions based on it. First, they'll decide if they should lend to you at all, and if they do decide to lend to you, at what cost. And for them, that means what interest rate are they going to charge you? The higher the score you have, the lower the interest rate the bank is going to charge you. We'll walk through a few examples in a minute as a demonstration of this. But before that, who else looks at your credit score besides banks? Employers. It is not uncommon as part of the background process for an employer to do a soft credit check or soft credit pull on you. They're looking for a few things. First of all, how responsible are you at managing your money and at taking care of your responsibilities? They also will see if you're experiencing financial hardship, like a bankruptcy, for example. They know that those who are experiencing bankruptcy or financial challenges are more likely to accept bribes or steal from the office. Another party who will be interested in your credit report are landlords. Again, they're looking for a few things, and this is another soft credit check, which you remember does not impact your score. They're looking at how much debt, both in how many lenders and the total dollar amount, do you have outstanding. The more lenders you have and the more you owe means the less likely they are to get paid every month. They're also looking for past bankruptcies or a history of collections. Again, they know your past history is a good representation of your future. And if you've had issues paying someone back in the past, there's likely issues coming in the future, making payments to them in the form of rent. So let's talk through some examples of how your credit score can save you money in the long run. First, let's look at a student loan for $30,000 for a 10-year term. A 10-year term means it's going to take you 10 years to pay back the $30,000 with interest via monthly payments. So student loan borrower number 1 has a credit score of 760 and in 10 years ultimately pays back about $36,000 for a $30,000 loan. Student loan borrower number 2 has a credit score of 680 and they pay nearly $38,000 for a $30,000 loan. So just an 80-point difference in credit scores means nearly $2,000 difference over that 10-year time. Now let's look at a car loan example. Let's say you've just purchased a $36,000 car and were able to put $3,000 down. That's great news because now you only need a loan for $33,000. The average auto loan is a 5-year term, which means you make monthly payments for about 5 years. The first borrower has a credit score of 680 and ultimately pays nearly $37,000 for a $36,000 car. However, auto loan borrower number 2, who has a credit score just 81 points less, pays nearly double the interest rate as the first borrower and pays nearly $44,000 for a $36,000 car. That's a difference of nearly $7,000 in just 5 years. Over $1,000 a year is paid toward that car for the auto loan borrower number 2 versus auto loan borrower number 1. Finally, let's look at buying a home example. Let's say you've purchased a $250,000 home and you're able to put 10% or $25,000 down, so you only need to finance $225,000. The typical term for a mortgage, which is a home loan, is 30 years. The first borrower has a credit score of 740. They will ultimately pay $375,000 for a $250,000 house. The second borrower has a credit score of 620 and will ultimately pay over $410,000 for a $250,000 house. That's a difference of over $36,000, which is more than $100 every month the second borrower has to pay versus the first borrower for the exact same house. As you can see, your credit score is really important, not just to banks, but to you and employers and landlords. Take the time to tend to your credit score and be responsible, and you'll save thousands of dollars in your lifetime. Thanks for stopping by. Don't forget to subscribe and check out our other videos.